Hello and welcome to another edition of Stockwatch, the last Stockwatch of the trading week, and earnings season keeps on giving, and we're looking at the two cola giants of the world, PepsiCo and Coca-Cola, as they released their earnings details yesterday. And it seems that they have both beaten expectations on Wall Street. However, their 2022 forecasts have been very downbeat due to inflation pressures and the possibility of higher costs in their distribution, and obviously passing this on to the consumer as well. So that's why PepsiCo in particular shares fell yesterday. Coca-Cola up slightly at 1.3%, but PepsiCo, as we'll see on the chart shortly, were actually trading lower, even though the upbeat news saw that revenues and earnings per share came in higher than expected. So let's just take a look at the details then. So PepsiCo had more than $1 billion more in revenue this time around in the last 3 months. But as I just said, what analysts are predicting for the full year ahead means that we're looking at probably higher costs, and due to higher inflation. We're just waiting for tapering measures, or the next round of inflation hikes by the Fed, supposedly coming in next month. So we'll see what happens with that and the rest of these companies, not just PepsiCo and Coca-Cola as well. So as I said, both companies exceeded expectations on EPS and revenue. However, we are looking at costs in aluminium cans, labor shortages as well, and also the other factors of shipping delays because of the coronavirus pandemic in general. So we'll see how that goes on into 2022 as well, but not looking too great for the outcome at the moment. So PepsiCo, as you can see here, very vast accentuation on the stock. But if we just zoom in on the daily chart with the assistance of the Ichimoku cloud, as you can see here, very large fall in yesterday's trading, and now more importantly, the last candle, which is a very short candle, similar to a doji, we are looking at that it is completely engulfed in the Ichimoku cloud. So looking now at prices falling lower. As you can see here though, we are looking at not too much of a divergence on the RSI. It is slightly bearing down, which could lead to another sharp upswing when the markets do open, because there is usually some short selling when these analyst expectations come out. However, if we can not go past the bottom border of the Ichimoku cloud, then I'll be expecting another jump higher and a full retracement on the stock as well. Let's just take a look at the 4-hour chart just to see a little bit more of an in-depth look. So as you can see here, I'll just make it a little bit more easier and take these things away. So now we are falling below the Ichimoku cloud, which is quite significant. However, like I said, if we can avoid hitting these recent bottoms, then there's no reason why we can't see another upswing in price and then a move higher to kind of like cover the gap that we saw yesterday and then get back on track. However, going into 2022, though, we'll have to see. Inflation data will be key for a lot of these big American corporations, and obviously with the rollout of more vaccinations across America, we'll see if that has any impact on prices for companies like PepsiCo and Coca-Cola. Speaking of Coca-Cola as well, just take a quick look at the stock. And let's start on a daily chart like we usually do. Just a brief look at what possibilities we have. So the last time I looked on Coca-Cola, we had this downward channel, then we had a very choppy insight. The fact that we've broken the recent peaks suggested bias was on the upside, and even though we did get not a bad earnings call, but a bad prediction for the rest of 2022, a bad forecast, prices did finish in the green yesterday for Coca-Cola. So that's quite significant. And now, as you can see, we are still above the Ichimoku cloud, trading bullishly and, into this kind of ascending channel at the moment. The only thing I am worried about is, well, for bulls especially, is that we are looking at a move to the downside at the moment. So we'll see how that plays out in the near term. And just have a look in on the 4-hour chart as well. Again, as you can see, similar story. We're just trading a little bit close to the Ichimoku cloud. We are just bouncing off it at the moment at the top border. We haven't actually dipped below it, but if we do, it is very thin. So there is quite a good opportunity to bounce back. For bears though, just look out if we do break these certain support zones, prices could start falling lower, especially with this bearish divergence in place on the RSI. And we'll see what the opportunities are going forward for the rest of the trading month as we get into March and into into the Fed's first decision if they're going to hike rates or not. So just keep a lookout for that. So that's all from the Stockwatch today. As usual, any comments or queries, please feel free to add them to the post, and I'll get back to you as soon as possible. Have a great trading day ahead, a great weekend ahead, and bye for now.